All right, gentlemen, let's welcome Mr. Nirad Tewarie to the program. Good morning, Nirad. How are you?
Hi, good morning, gents. I'm fine, thanks. Good morning to all your listeners. Good to be here.
Lovely. It's
Good
been a
morning,
while.
Nirad. He was asking if we're on air. No, we're online, but we're still very active because we got a letter from TAT recently.
Yeah.
So we're being regulated by the regulator.
Paul, I saw what Marco.
I'll leave that for legislators to deal with and Paul.
Paul, I saw what Marco what that was about yesterday. I was hoping you'd share it with me, but you didn't.
I'll share it with you now.
Yes, share.
All right. Good morning, Nirad. Thanks for joining us this morning. Nirad is the CEO of AMCHAM. Is that correct?
That's correct. Unless
the CEO of the American Chamber of Commerce.
That I don't know about.
And of course, the budget date has been announced. But even before that, what has your membership been telling you about the heat wave and if at all it's affecting their operations?
Okay. Well, all right. You kind of threw me. No, thankfully we haven't. I haven't had any specific complaints about the heat wave. What we have been hearing from the membership over the last couple of years with some greater intensity, of course, is the need to take into account our overall impact on the climate and on communities, so on the environment and communities, and the need to try to get the information and implement strategies to make sure that our production and consumption is much more sustainable going forward.
Okay. Well, the other big issue, of course, in the last couple of days has been the Forex issue, but it's not a new issue. But certainly it has come up into the national conversation again since Republic Bank cut by 50%, cut in half the availability of credit card US access per monthly billing cycle, and how that is affecting particularly micro, small, and in some instances medium-sized businesses. What has the response been from your membership on that?
Oh, it's been very loud. Now, before this happened, over August, July, and August in particular, members have been calling and asking what, if anything, we could do around the availability of foreign exchange, indicating that a problem that has been persistent for years has gotten worse. And I would have tried to explain what's happening a little bit in a piece I did 2 days ago. And what has happened is that with the VAT bonds that were issued and announced in the last budget, they were issued this year. The energy companies are owed hundreds of millions of dollars of VAT refunds. Now, VAT refunds, and forgive me, tell me if I'm just going too deep into it, but the VAT refunds, companies collect VAT on behalf of the government, but they are entitled to, and they pay it to the government, but they're entitled to get some of that back depending on their own expenses that attract VAT. Yes. Right? Ideally, this should be netted off in a quarterly period. Unfortunately, that has not been happening for several years, and essentially the private sector has been funding the government's cash flow by virtue of not collecting their VAT refund. And you would persistently hear all of the chambers talk about the impact of not being able to access one's VAT refunds, particularly on small and medium-sized businesses, because if you don't get in money, cash that you're expecting to get, it affects your operations, right? In the energy sector, that happens, and of course that happens on a larger scale because of the volume of that we're talking about. So the government, in trying to clear up some of the outstanding VAT, which is a good thing, would have issued bonds so that they don't have to pay all of the money up front. So for argument's sake, let's say it's $1 billion in bonds that they issued. they don't have to pay out the $1 billion. What they're doing is they issue the bonds at a interest rate of just over 3%. They would pay the 3% plus of the $1 billion every year to the holders of the bonds until they become due. So so companies would have accessed their bonds and sold them to the bank. The government worked with the financial sector to ensure that if you sell the bonds immediately, you get dollar for dollar. So if you were owed, let's say, 200 million of that, and you sold your 200 million, you would get of bonds. You would get $200 million in cash now, and the holder of the bond would earn the interest over the period until it can be redeemed for the principal value as well. So the energy companies have accessed some of their bonds, and the energy companies would usually change, and by energy I mean upstream and petrochemicals. They would usually change some of their US dollar earnings because their products are traded in the international markets, as we know, and they would change that money to pay local expenses. That, in addition to the taxes that they pay and other businesses' sales of Forex back into the system, is really how we get foreign exchange for other things in the economy, right? Because they have because they have accessed TT dollars via the bonds, they have not been selling as much, if any, back into the system over the last quarter or two, and that is expected to continue into quarter one, maybe quarter two for some companies, 2024. As a result, there's much, and they sell this directly to the banks, right? So they would say, let's say they have X dollars, X US dollars, and Y expenses in TT dollars, they would sell that US dollars back to the banks directly. Because they haven't been doing that, the situation has gotten more acute because we already had a shortage and now it's worse. And because the government has its benchmarks for what it wants our reserve ratio to be, they have not sold any extra. The central bank has not sold any extra US dollars into the system to sort of smooth out this further dip in US dollars in the system. And of course, that is being passed on to consumers of all kinds. Now, the banks have to pay credit card, the US dollars associated with credit card transactions first. And so if they don't have US dollars, or they don't have the quantum of US dollars that they would have had before, it puts them under greater strain. Now, no bank wants to, I'm not defending the bank per se, but no bank wants to reduce credit card spending. In fact, credit card spending is a lucrative part of banks' businesses. So it's not that the banks, it's not that the banks want you or me to spend less on our credit cards every month. I'm sure if they could, they would increase limits if they felt we'd pay it back. Even if we pay it back over time, that might be better for them, right? So that's the situation as it stands, as I understand it.
But I'm glad, as you touch on that point, Nirad, I'm happy that you said that, because that's how I've always known it, that credit card purchases, the banks benefit from that more than anything else, especially US credit card purchases. So why then would they have taken the decision that they took? Is it that they are preempting something? Is it a preemptive strike?
Well, not preemptive. So if they have less US dollars, right? They also, I'm sure, are mindful of the need to extend US dollar facilities to business clients who need those things for inputs to keep the economy going. For people who have, for example, children in university, for health expenses outside to individuals and so on. And if they know that they need to pay the credit card amounts, so whatever they need to settle with Visa and MasterCard and so on, would be the primary call on the US dollars. They are attempting to manage their own US dollar capacities at a
But the
time.
bank didn't indicate, unless you can tell me differently, the bank didn't indicate that certain categories of users will be exempt. The bank said holders of RBL credit cards generally. I guess you can individually say, well, my child is in university and I need that 50% is going to put my child out of school. But that is not what we've heard from the bank. The bank just made a statement that 50% of the credit card per monthly billing cycle is going to be taken away.
Yeah.
Yeah, but again, I think I'm hearing, Paul, in what you're saying. So first of all, not everybody who is using US dollars is doing it via their credit cards, right? I mean, it's a lifeline for small and medium businesses who can't get US wire transfers or US cash out of the bank. But there are many customers, I'm sure, who do use wire transfers and other methods of accessing US dollars outside of the credit cards.
When you can get it?
Pardon?
When you can get it, when you can access it?
Yes, of course, yes. But you see, the bank, remember, we have a fixed exchange market, right? So we have a fixed exchange rate. So it's not, what has happened over time is even the foreign banks that might have been willing to take a TT dollar position are not willing to do that. So not many people are willing to buy TT dollars in exchange for US dollars, even outside of this market, because there's a difficulty in changing TT dollars. And that is a function of many things in the market, including the fact that we effectively have a fixed exchange rate. Now, that takes us down a slippery slope, right? So dealing with this part of this set of policy requires discussions around inflation, requires discussions around, how do we ensure that we have enough foreign exchange coming in to cover our bills if the exchange rate were to slide and it becomes more costly to buy US dollars. It also affects our national debt because a certain portion of our debt is held in hard currency, and therefore it will affect the debt to GDP ratios and so on and so forth. So one of the things that we're saying, and we very much welcome in the minister's recent statement that he said he's going to have discussions with the central bank and the business community and others, we do need more policy clarity over the medium term and to figure out, okay, what do we really want to do with regards to foreign exchange and the exchange rate and the like, and how are we going to get there with as little as possible pain in the adjustment, because nothing we do now is going to be pain-free.
Well, the question, Nirad, that arises from that is, from what you have described, the pressures are mounting significantly, given what you've identified as if this is correct, the government's position to keep the foreign reserves. I think it's at 6 months cover, if I'm not mistaken.
8 months, I think. I think it's
8 months cover,
yeah.
If I'm not corrected, 8 months cover, and keep that there. Also, manipulate the situation, I'm using that word very guardedly, to manage the the exchange rate to US dollars, because really it's being kept there through certain maneuvers. You understand? Given the supply side and the demand side in the system in Trinidad and Tobago. Is this sustainable moving forward, given the present conditions?
I think it's becoming increasingly difficult, and it's having a significant impact on business. But any knee-jerk reaction, and certainly any single policy measure, is likely to make it worse. So it has to be that we do several things in conjunction, right? And and it's going to be tough. It's going to be tough. So if we can find the mechanism to collaborate and to keep a dialogue going, so that when things get acute, we can try to respond to the acute situation, knowing that we have a longer term objective. It would be much better than people just talking at one another and doing things in a doing things without completely letting the major stakeholders assist with getting us to a solution.
Well,
Yeah,
isn't the actual solution really that the country has to have an economic policy and direction that earns us foreign exchange and foreign direct investment, and we should be aggressively going after that? But a lot of the times I find the narrative is, oh, the foreign exchange issues, how we control it, rather than, okay, look at it from the other lens. Let's aggressively get foreign exchange into the country. Whatever we have to do. We have to increase our tourism stock. We have to make sure that we're selling more. We have to be doing all of that. Isn't that the better approach?
Well, they're connected. Of course, we all want to earn. We all want the country to be earning more foreign exchange. But if, for example, you have a situation where potential investors decide not to invest because they feel that if they do invest, they can't repatriate profits because they can't get hard currency, then that also has an impact on our ability to earn foreign exchange. And that's part of what is happening now. So that's why I'm saying the solutions are not simple. And there are many people who say, well, they don't understand why the business community is complaining. We, the business community, should just earn more foreign exchange. Well, if it were that simple, trust me, all businesses would do it because they would prefer not to have to go to financial institutions and wait and beg and damage long-standing relationships.
Well, I don't think it's solely a business. I don't think the solution solely lies in the business community. I think the solution lies between government and business to a large degree, and largely the overarching infrastructure and facilitation by the government in whatever incentives to get foreign income earning businesses and industries growing and expanding. And I think that's
what I've heard, Nirad, is that a lot of these businesses just not bringing the foreign currency here. They're leaving it out there. They're not bringing it back.
Well, that might be part of it, and if that is part of it, why? Right? So, if, for example,
that's the question. Why?
But they're waiting for devaluation. That has been discussed. And sometimes they say they're waiting for devaluation to bring back in their money, and the state has often put the narrative that there is not going to be a devaluation.
Yes,
that's part of the issue.
That's true.
Well, okay, but capital goes where, one, it's welcome, and two, where there can be a return, right? So, if people aren't bringing it back, what are the options to earn a return? When you make money, you don't make money to just hold on to it. You make it to use for something or to continue making money, right?
So
from a salary to anything else, right? You want your money to create some kind of value for you, and value could be buying food so you could take care of your family, and value could be investing in a small pension or a house or a vehicle, or if you have that much extra, to use it for something else. Some people fix up a room and rent an apartment or buy a second property or any number of things, right? So if nationals have US dollars that they're not bringing back to Trinidad and Tobago, we have to look at structurally why is that happening, and all of those things are connected, from the value of the exchange rate to why dollars are not being repatriated to the ability to attract additional investment that is export focused and therefore has a high potential to earn foreign exchange. All of these things are very much linked. And so that's why we're saying that we need to come together. There needs to be long, medium term, at least policy clarity around what we're trying to do and how we're going to get there. And that may mean that we have to change some positions as we go.
But do you think the government is actively and consistently taking on the championing the issue of dialogue with business? I am almost absolutely sure that the Minister of Finance did not find out about the Republic Bank's plan to slash the credit card access by 50% in the news like the rest of us.
Yeah, especially when the state has an interest in the bank.
Yeah, I don't think that happened like that. I think the minister knew I could stand corrected if I'm wrong, but the minister is in a position where he would know that was coming because of the underlying circumstances that would have led to that and the relationship between the bank and the state, right? So he knew that, and that was not a decision clearly not taken lightly by Republic Bank. It's a survival move for the very reasons that you outlined, Nirad, in terms of their ability to pay, to service what is spent in credit cards on the US side, which means the minister is aware of the pressures facing the local banking industry, the local financial sector. So I'm surprised to hear that the minister said, well, I'm going to have a meeting with the commercial banks, the central banks, and the business community to discuss the pressures in terms of supply and demand and the increased online spending and the expansion of the economy that where US is being used to pay for inputs to drive the expansion in local business. I'm surprised to hear that meeting is now going to take place, particularly 3 weeks before our budget.
Paul, I'm glad you're saying that because that was my thinking too. Aren't you the minister in charge of these institutions anyway? How could you be taken by surprise?
Well, he's not the minister in charge of the institution.
Financial institutions.
He's not in charge of the financial institutions. He's the line minister for finance, so he has a relationship with institutions.
Right. However, I was just putting it a different way. But I'm just saying that should not, in my opinion, sorry, Nirad, but that, in my opinion, should not have come as a surprise to anybody, especially when the state has an interest in Republic Bank. So but Nirad, the bigger question too, I wanted to ask, wouldn't this also grow an already growing black market economy, black market US economy?
It is likely to. I mean, I can't say for sure, but it's likely to. So if I need US dollars, I mean, I wouldn't do it, but people will find ways to do. People who have may offer it and offer it at a greater premium, right? So the spread between the official rate and the black market rate is likely to increase as well. Yes.
Yeah. Yes. But it all goes towards the issue of devaluation, which certain economists say, well, look, what is the real value of the TT dollar against the US? And obviously, many of them say, obviously, what we have now is not the actual rate, and it should be devalued, which I think connects to that issue, Wendell and Paul and Nirad, why so many, not only businesses, but so many personal individuals who have loads of US dollars abroad are not going to bring it back in until that happens, or they're assuming that that's going to happen at some point.
Yeah.
And to me, the fix is you have to be more aggressive about getting foreign exchange, and that includes tourism, et cetera, because the other islands don't have the problems in the same way that we do. And we're a country of 1.4 million people. This is not, I mean, it's only so much we could spend.
Yeah, and I don't know.
It needs a solvable problem,
yeah,
but it needs that kind of aggressiveness in terms of that outlook. And you're right, it does connect to other things. It connects to confidence. It connects to the issue of crime and how confident people feel in the economy because of the issue of crime, which affects confidence. You have all of those things bubbling under the surface. Well, crime is not bubbling under the surface. It's very much rearing its head. But all of those things interconnect into the overall picture to where we are today. I just wanted to ask one question, Nirad. Maybe about a few months ago, I read an article. I can't remember by whom. I was an economist of some sort, or who suggested dollarization and for the Trinidad and Tobago economy. And I am absolutely ignorant of how that would work. I don't know if you have any sense of how that would work. If we
What is dollarization to start with?
Dollarization is when you either partially or fully substitute your local currency to a particular foreign currency. So I think what the economist was suggesting was that we, in other words, do away with TNT dollar and fully dollarize into US dollars. So that becomes our medium of exchange, US dollar. I don't know what Nirad thinks about that. I mean, I have no, I'm not an economist, so I have no real sense of how that would work and what the effects would be.
But we can't.
I think it was Justin Ram and also the former governor of the Barbados Central Bank, Dr. Delisle Worrell, has been making the same point. Panama, for example, is a dollarized economy.
Yeah.
So there are countries that have done it, and you know, one can examine the experience and see. And I don't believe in, you know, I've learned over the years not to get too caught up in the philosophical positions, or as Bob Marley said, the isms and the schisms. Let's examine our options and the impact of implementing one option over another, understanding that as we look to one option, there would be other things that would go into that. I don't think there's a panacea of any kind to fix the problems that we have, and it will be a journey. So unless we do this together and figure it out and agree on a path and understand and accept that there are steps in that at each step there will be ripples, hopefully not waves, and we have to deal with the ripples so that we keep the ship afloat, it's not going to be, we're not going to make any significant progress. I mean, immediately we have a mini crisis, and the answer would be to inject additional foreign exchange as an ad hoc measure into the system. The result of that will be some level of smoothing out, as in some reduction in the critical demand. However, it will not, that foreign exchange will evaporate pretty quickly, because we're going into particularly because we're going into the Christmas period, right? But it will also further reduce our foreign reserves. So unless we have a reasonable hope and plan, not hope, but expectation and plan to rebuild those foreign reserves in the next 6 to 12 months, it's risky. But I would also argue that that is my recommendation at the moment, because leaving things as critical as they are is riskier than doing nothing.
Nirad, is this Forex issue pervasive across the Caribbean? Do you have information on that?
No, it is not. Except
it is not. It is not.
So someone asked the question to ask. Someone's got a question to ask. How come we are having these issues and our economy is supposedly stronger than most of the other Caribbean countries? Is it that we have more pull, more demand in our Forex compared to those other economies in the Caribbean?
Yeah.
Or what's the reason for that disparity?
We have all the big conglomerates here, not so? Those small islands don't have that problem.
No, that's not it. The reason has to do with the reason has to do with the fixing of the rate of the dollar. In Jamaica, the Jamaican dollar moves significantly in a short space of time, depending on what's happening in the economy, and is based on demand and supply. So, Yeah, so it's based on the rate of the dollar. Now, as I said, if you were to just implement one policy measure, such as a free float tomorrow, which is different devaluation, right? So a devaluation is where you fix the rate, but you say the rate is now 8 or 7.5 or 9 or whatever. A free float would mean let the market determine. So if the financial institutions have $1 billion to sell over the next month, they will sell it to whoever is paying the most for it. They'll set the rate and the market will decide. And that could go up or it could go down depending on the demand for foreign exchange at that price and the availability of foreign exchange at that price. Now, to just go to that overnight would have, and I agree with the minister on this, is likely to have disastrous effects on the economy. And that's why we're saying that, look, let us deal with the acute crisis that we have, try and buy ourselves literally about 6 months to figure out how we want to go forward and then start working toward that. By end of March latest, hopefully we'll start seeing more foreign exchange sales from the energy companies back into the system. That won't take us to equilibrium, but it would reduce the difference, the deficit between demand and supply, and hopefully we can start seeing a way forward for the medium term.
But
Budget
Nirad, are we
2024.
currently operating with a floating rate?
Pardon me?
And we currently operating with a floating dollar rate?
No, it's a managed float.
No, it's a managed float.
Okay.
I mean the rate as I don't remember the exact numbers, but I think it's a 15-cent float.
Mm-hmm.
Yeah, the central bank, my understanding, injects money to keep it within a particular range. Am I wrong, Nirad?
They inject money, but they also determine the rate, the maximum rate that it could be sold at.
Yeah, so there's a managed rate.
Floating within a certain limit.
There's a limit.
Correct.
The budget is coming up on October 2nd. What is critical from the Chamber's perspective to be included in that budget based on what you discussed this morning and the points Richard has made about championing things like tourism? We've had these discussions. We've talked about diversification ex etal ad nauseum in this country, but it's still an energy, hydrocarbon, breadbasket economy. What's been missing over the last couple of decades in actually moving that needle forward? And what's important in this budget in moving that needle forward?
Well, I mean, what's been missing has been implementation, right? I don't think that the plans are bad, but taking the bull by the horns and dealing with some of the difficult issues, such as, say, customs, implementing the National Statistical Institute so that we have real-time data, implementing the National Unique Identification Number and linking that back to all the social services and government IDs, e-payments within the government sector that would allow for less friction and even the payment of taxes and so on. Identifying, using something like GIS to identify all the businesses in a particular sector that are not paying taxes and bringing them into the tax net, and one can do that in a non-punitive way, in the sense that you can take a decision that, look, you weren't paying taxes for X many years, fine, we're not going to go after you for that, but going forward, you're on the tax register and you have to start paying taxes now. So there are ways to do things and move the economy, but someone, I think it was Richard, who spoke about confidence. That right now is key, and confidence can only be built if people believe that there is positive movement and hope for the future. So we have to do more in that regard. We have to get some critical things done that would continue to convince people that, look, this economy, this country will move. We're going to reduce crime. That is the number one issue. We're going to reduce crime. We're going to improve our institutions. And we are going to remove the bottlenecks to doing business across those cross-cutting things that would really free up businesses of any kind, small, medium, micro, and large.
Would you be an advocate of removing the parameters within which the exchange rate moves? As you said before, it can be an overnight thing. It will crash the economy if it's an immediate thing. But based on what we've discussed this morning, the pressures to keep it there are almost unsustainable given what I'm seeing.
I don't think that is a one-off. As I said, I don't think that should be a one-off policy measure, and I think we should have a multi-party discussion around the whole issue of foreign exchange availability and the factors that impact that, and come to some agreement around that, and therefore agreement around the steps that we would need to take, the policy steps, the things that the business community might need to do to support that over the medium term.
Okay. Well, thank you so much, Nirad, for speaking with us this morning. It's always interesting having conversations with you, considering what's going on, not only with AMCHAM, but with the Trinidad and Tobago economy generally, and we appreciate your input.
Yes, thanks very much for having me, guys. It's always a pleasure to be here.
All right.